Ladies and gentlemen, please welcome our first panel. They will be discussing emerging markets with moderator David Rubenstein, Julia Zweig, Robert Wolf, and Mac McLarty.
Could everybody please take their seats? That was good.
Yeah.
Okay, thank you very much. We have a very interesting panel this morning on the emerging markets. And I am David Rubenstein. I'm a business person, and I spend a lot of my time investing in and traveling in the emerging markets. And the others on this panel also have a wealth of experience and knowledge about the emerging markets. So to my immediate left, Julia Zweig. She is the Nelson and David Rockefeller Senior Fellow for Latin American Studies at the Council on Foreign Relations, and she directs the Foreign Relations program there on Latin America at the Council. She also has written extensively on this subject and is an expert in many different parts of Latin America, but also heads the Brazil Initiative at the Council on Foreign Relations and also the Cuba in the 21st Century project at the Council on Foreign Relations. She's a graduate of the University of California and a PhD from Johns Hopkins. Next, Robert Wolf. Robert Wolf is a person well known to many people in Washington as the president's best friend in the business community. And he is somebody who was very helpful to the president getting...
Why not an ovation for that? Well, lots more than that.
He was very involved in the president's campaign in 2008 and more recent, in the more recent re-election campaign. But Robert also has an extensive business career in the emerging markets and in the business world. He was, for many years, the head of the investment bank for UBS, a global investment banking and commercial banking firm. Also was the head of trading for many years at UBS in the Americas and headed up their Americas operation for many years. Robert now has a new firm called 32 Advisors, which is an international consulting and advisory firm, and he has served on a number of boards appointed by the President, including the President's Economic Recovery Board and also the President's Jobs and Competitiveness Board. And Robert is a graduate of the University of Pennsylvania. Mac McLarty is well known to many people here, I'm sure, for his involvement in Latin America and other parts of the Americas. Mac is a native of Arkansas and had the good fortune to go to kindergarten with President Clinton and reconnected with him later on and became the first chief of staff to President Clinton and then later served as President Clinton's envoy to the Americas and did an extraordinary job really developing relations between the White House and the administration and all of the Americas. After leaving the Clinton administration, Mac resumed the chairmanship of his family organization, McLarty Companies, which is a fourth-generation transportation company, but he also formed McLarty Advisory Company, McLarty Consulting, and that is an international advisory firm that does consulting around the world, particularly in the emerging markets in Latin America, China, Russia, among other places. And so Mac is heading both of those companies and has been extensively involved in the emerging markets as an investor and as an advisor. So, before we ask some questions to each of our distinguished panelists, I want to ask a couple questions of the audience. How many people here are from something that might be called an emerging market? Okay. How many people are from something that might be called a developed market? Okay. How many don't know where they're from? Okay. How many from the emerging markets think that the emerging markets economies are getting better this year than they were last year? Anybody? How many think they're going to be worse? Okay. How many people here think that the emerging markets in which you live, those who live there, are going to export more to the United States than they did last year? Anybody? Jeez. Okay. And how many people here think the U.S. Export-Import Bank is the greatest organization in Washington, D.C.? Okay, that's the right answer. Okay. So, on my immediate left, Julia, can you tell us, in Latin America, Brazil has been considered one of the leading BRICS, so-called, but it didn't do that well last year. Its growth was about 1.5% or so. What accounted for Brazil's modest growth last year, and do you see Brazil coming back this year?
Thanks very much for the introduction, and I'm very pleased to be here with all of you today. The contraction of the Brazilian economy in 2012 in part was related to sort of reflection of the decline of commodity prices. Brazil's growth over the previous decade or so, which had hit 7, almost 8%, was really driven by high external commodity prices, and that downturn has really affected Brazil. Internally within Brazil, there's a substantial debate about the way the management of the currency has also perhaps been an impediment or a driver of Brazil's economy. The attempt to hold down inflation on the one hand, but the slowdown in exports has also hurt Brazil. Going forward, the speculation is that Brazil will hit, if not in 2013 and 2014, about an equilibrium of back up to 3.5% growth, which I think is more along the lines of expectations for a country that is a large democracy, a complicated place, and that can't sustain the kind of high 7-8% growth that we just saw in that one moment.
Okay. Now, recently, one of the leading businessmen there, Mr. Batista, had some problems. The value of his holdings went down but dramatically. Is that going to affect Brazil?
I don't know if that will affect Brazil as a whole, but certainly it is an indicator of the need to not let complacency set in. And there, I think the sort of political, psychological impact of that is perhaps to actually help the president drive a stronger consensus around addressing further structural reforms.
Okay. Robert, the U.S. exports, are U.S. exports actually up from where they were before, and what do you think accounts for that?
Yeah, thank you. And I just want to say that Fred Hochberg's speech was fantastic. If it was a public company, this stock would be on wildfire. So the president started an export initiative that, for the most part, a lot of people thought had no shot of getting done. It was doubling of exports over a 5-year period. Exports, as a percentage of GDP, when he started in the office, was about 10%. Today, it's a little over 14%. But we are still the lowest industrialized country around the world. Germany is somewhere near 50%. So we've come a long way with double-digit growth for the most part each year, but we still have a long way to go. I think the free trade agreements have been important. Obviously, having a relatively low currency has been helpful. The initiations of the export bank has been quite helpful, but really manufacturing has had a nice comeback. It's at a 15-year high in this country, and so people are buying what is built in America. And I think that's partly because healthcare, energy, technology, things where we are the best at, is being purchased from within the U.S.
Okay. Mac, let me ask you a question. When you were in the White House, NAFTA was a very important subject, and there were some people who said that it would not be advantageous to the United States to have NAFTA. And today, the Mexican economy is actually doing very, very well, growing much higher than we are, and the Canadian economy is doing pretty well. So were the critics of NAFTA right, or did NAFTA actually help the United States?
I think the facts suggest the critics were wrong. I think NAFTA not only has been good in terms of exports, the growth, and the economies of the U.S., Mexico, and Canada, but I would also put forward the very, I think, sound notion that with the passage of the North American Free Trade Agreement, it really solidified the increasing democracy and open market, outward-looking perspective in Mexico, and that is a large neighbor to the south. And so I think Mexico has continued to make democratic reforms. I think with the new president, we'll see that moving forward in the days ahead. So I think really by any measure, the North American Free Trade Agreement has been a success. You're right. It did require some expenditure of political capital in the White House to get that passed on a bipartisan basis. It's the only time I can remember Newt Gingrich and George Stephanopoulos counting votes in the Roosevelt Room together. That was a good day.
So you spend a lot of time now in China. Tell us, do you think that the new Chinese leadership is likely to change economic policies very much towards the United States or elsewhere?
David, I just returned from China. Of course, you know China very well, and Laura and others do, certainly. On balance, I'm hopeful about the future of China and their continued economic liberalization and policies. President Xi seems to be the right person at the right time. I think it's inevitable, frankly, in terms of the interconnectivity of the world. China's really stepping on the world stage in such a dramatic and significant manner. I think with communication the way it is, it's inevitable. So I think I come down on the side that we'll see a continuation of the policies, but perhaps a deepening of opening of markets reform. Not perfect, not a straight line, but overall a positive trend line. And look, at the end of the day, the world's increasingly interconnected, as everyone here knows, and certainly the U.S.-China relationship, both from an economic, security standpoint, stability around the globe, is absolutely imperative and key.
So to each of you, the phrase emerging markets was more or less invented in the early 1980s and was then designed to apply to about 20 countries. Now it applies to many more. In fact, everybody seems to want to be called an emerging market today because the term seems to be very favorable. But do you actually think it's still a fair term to use and it's an accurate term to describe so many countries as emerging markets, or would you come up with a different phrase for these countries that are high growth, young populations, and industrializing pretty rapidly? Would you have a different phrase if you could come up with one, or you like that phrase?
I'm happy with the phrase. I would say that the one, as a person who is both a historian and somebody that thinks about policy, I would just say that I understand the audience I'm speaking to here, but emerging market, the word market really only tells us a partial story about what's happening in these large developing countries. And Latin America is a great example that what is also not just emerging are big growth opportunities in terms of markets, but political opportunities in terms of, although a very diverse kind of democracy, consolidated democracy almost in the entire region. And that I think I would just try to add into our minds as we think about what potentially is one of the drivers of success, at least in Latin America. And just the final point on Brazil that I wanted to add in terms of this duality, that on the one hand we've seen low growth 2012, but also Fred was talking about the growing middle class, the need to drive the expansion of the middle class everywhere. In the last 10 years, Brazil has moved 40 million people, that's the number of the entire population of Colombia, into the middle class. We still see full employment in Brazil. We see large consumer demand. We see a country that is really going forward despite the large macroeconomic turn. So I would just add sort of the political social dimension as we think about what are the factors that allow a country to keep moving forward and keep emerging.
So Robert, if you were told to come up with a new name for the emerging markets, would you come up with one, or you just say it's a good phrase to use?
One, I do want to answer part of the China question, but I'll do that later on. You know, I've been trading markets for going on to 29 years. And so I think for some reason there's a stigma when a country is called an emerging market. Countries are not emerging market. The market's emerging. So, for example, when emerging markets came about and we were trading debt back in the 80s, an emerging market meant that they were developing the markets. Okay, the rules of debentures and the rules of covenants. Today, emerging markets actually depict the country, and I think that's a bad term for it because no one can tell me that China is an emerging country or Russia or Brazil, but they're still considered part of the emerging markets. So I think it's time that we bifurcate those that are now just mature countries and just call them Brazil, India, China, whatever we want to call them. And then the emerging markets should be more about the rules and regulation of their markets. So we understand the accounting and the policies and the transparencies and not make market as if it's the country.
All right. And your point on China you wanted to make is?
You know, the only thing I would add with China, I think it is changing. And I think that, you know, in this country, you know, I guess the opposite of the export initiative would be the foreign direct investment initiative. And before September 11, 2001, 30% of this country's GDP was foreign direct investment. We can argue because of protectionism, lack of immigration reform, permitting and regulation, all different reasons. We're now under 15% of foreign direct investment as part of the GDP. But last year, China had their highest foreign direct investment into this country. They had about $6.5 billion, including big deals that you know of, you know, whether it was Devon Energy or AMC. So I think that as we understand that it's important for us to get foreign direct investment back, as we think about changing the FIRPTA laws, which is what the president came out with on his infrastructure announcement last week, that China is going to become so much more important, and I think 2012 was a kind of a good starting point.
Okay, Mac, when the phrase was invented by Jim O'Neill, BRICS,
Yep.
to describe the 4 big emerging markets, Brazil, Russia, India, and China, at that time, it wasn't clear which one might be the best when he came up with the phrase some 15 years ago or so. One of those countries has lagged behind in terms of foreign direct investment, and that's probably Russia. As somebody knowledgeable about that, what do you think about the opportunities in Russia, and is that a place you're comfortable investing?
On balance, I come down positive on Russia. I think what we've seen is clearly people have been uncomfortable with the political risk and frankly, just the mores of doing business in Russia. And if you had a partner in Russia, was that person in the right club today and out of that club tomorrow, and that directly affected your investment. I think, moreover, despite a developed economy in many ways, much more akin to a developed economy in Europe, you still have an inordinately large dependence on Russia on energy. And I think if you talk to the leading business people in Russia, almost to a person, they will note that and say it's essential we broaden our economy. I think while it's hard to read Mr. Putin's mind and make predictions there, I think in order to continue to develop the country and to attract foreign investment, you're going to have to see a safer haven, a more secure, transparent environment for investment in order to grow the Russian economy. And David, at the end of the day, and you understand this perhaps better than almost anyone I know, I mean, look, these leaders, by and large, were elected in some shape, form of democracy and open elections. They have to produce, just like President Hochberg started talking about the success here at Ex-Im Bank. And in order to do that, they're going to have to build their exports, and they're going to have to attract foreign investment. So I think that will drive Russia forward. So on balance, I come down positive, but not without risk. And there's risk in all of these markets, including the United States.
Let me take the moderator's privilege to just comment a bit about emerging markets as a place in which to invest. My own firm does a lot of investing there in various emerging markets. And the premise of emerging market investment has historically been that because the growth rates are higher, younger populations, less government debt, and a lot of other factors, and less competition, you probably can get a higher rate of return for the investment. And that's why money has gone from the so-called developed markets to the emerging markets, looking for higher rates of return. The data doesn't actually bear out in the private equity markets that the rate of return is higher in the emerging markets, certainly on a risk-adjusted basis, than it is in the developed markets. So why should somebody who has capital, can invest anywhere in the world, actually invest in an emerging market? Because the rate of return might not be better, and probably won't be any better than it would be if you invest in the United States or Western Europe or Japan. Why would somebody invest in the emerging markets? Why should they take their capital and invest in the emerging markets?
What's your answer to that question?
Okay.
The moderator's prerogative,
Okay,
panelist's prerogative.
It's the largest private equity player in the world.
The answer to the question, to be serious, is that I believe the best way to make investments is to diversify. Nobody can be sure any one market, any one country is the best place to invest. So one should diversify, and one should invest in China, India, Russia, Brazil, any other emerging markets on the premise that they're going to get a reasonable rate of return if they know what they're doing and so forth, and they've looked into all the relevant factors, and they have a good team doing the investing for them. But it's not because you're going to get a 40% rate of return in China and only a 20% rate of return in the United States. That isn't realistic, in my view. You should invest in these markets because of diversification, and also because there may be ancillary benefits to your other businesses that may be helpful for you to be on the ground there. That's my view. But
I'm going to defer to you on.
Okay, so
I agree.
All right. So all right. Okay. Well, anybody want to disagree or no? Okay. All right.
Dare disagree?
So let me shift to another subject that Julia.
Move by acclamation.
Okay, Julia, you have probably the only person in this room who has interviewed Fidel Castro and Raul Castro. So how is Cuba going to be different if the Castros ever do leave, and they presumably will leave at some point? Do you think there will be a great place to invest? Do you think it will still have the same economic system? And what was Fidel Castro actually like?
Well, first of all, can I do something that you did at the beginning? Is there anybody else in the room here that's actually met Fidel Castro? I bet there are. You're safe.
Okay.
Okay, one. Well, one person that told the truth, at least. I haven't interviewed Raul Castro yet, although I have a standing ask there to do a profile of him for the New York Times Magazine. So hopefully, if he's listening,
well, I'm sure he's listening now, and no doubt he'll respond.
I did interview Fidel Castro on several occasions, both for my historical work and for my policy work, and I found him to be more recently, very quickly, quite different. Fidel, the retired person, versus Fidel, the guy in charge. The retired person listened, kibitzed, not a word you think of when you think of Fidel Castro, but was conversational. The active, governing, controlling, running the show, Fidel, wasn't such a good listener. But to your question about what can we expect after Fidel, and I would say that the post-Castro era, albeit run by his brother Raul, is already underway. And in that sense, over the last 5 years, and now accelerating, he just started his second and final term in office, Raul has begun to implement some reforms. They are not called privatization, but it is privatization, not of the large, big money sectors such as mining or infrastructure or tourism or energy, but certainly in terms of the world of small businesses, creating opportunity, shrinking the size of the state, issuing hundreds of thousands of licenses for individual Cubans to open small businesses, to employ without limit other employees, creating mechanisms for finance, for wholesale market. They need everything in Cuba: infrastructure, telecommunications, energy. And so I think, were there to be an opportunity, were we to sort of knock down the domestic political obstacles here in the United States to investment, to trade in Cuba, there would begin to be some opportunities there. And in 2012, President Obama won almost 50% of the Cuban American vote in Florida. I think we are at a very important fluid moment within Cuba that we could potentially take advantage of, as the rest of the world is, as Brazil, Russia, China, Mexico, any country you name it, has diversified.
So the Council on Foreign Relations isn't famous for paying big salaries, but the money that you have, would you put some of it in Cuba when Cuba can take money from people in the United States? Would you invest there?
Well, you know, the first thing that they privatized in Cuba was barbershops and hair salons. And I thought to myself, you know, if I were the hair cuttery, I'd want to get in there early.
Okay. All right.
But I would also, but to be serious.
That was serious.
Yeah.
It was serious. Yeah. It was serious. Actually, haircuts, pickles, I mean, you could see an opportunity. But also, human capital is very highly developed by comparison to other developing countries. And there, I think there's great potential in terms of the brains and creativity of people living in Cuba.
So, Robert, you've spent more time than probably anybody in this room or talking to the president about various economic
I thought you were going to say with my barber.
Well, you may have.
You know,
well.
I've had him for over 20 years. I give him $17. For 20 years, he tells me I've lost no hair, and I give him a $20 tip. He could be privatized.
So the President of the United States grew up, spent some of his time in an emerging market, Indonesia. Yeah. And have you talked to the President ever about emerging markets and his view on where they're going? And while you're not just channeling the President's views, what would his view be on the growth path of emerging markets and the role of the United States government in helping to foster their growth?
You know, I have not spoken to him about Indonesia, but if you think about his initiatives, whether Fred spoke this morning about some of the areas they're going, and you think about, I know you're going to comment later on about some of the frontier areas around the world. It seems to me that we think there is a growth capability anywhere for the U.S. to participate in, whether investing in the U.S. or helping finance the exports outside to the U.S. You know, Indonesia, obviously, as they continue their democracy, is doing better and better. It seems to be one of the best trajectory markets there are. And I remember a few years ago, no one wanted to touch it because there were riots in the street every day, and you weren't sure if a financial institution was going to be closed or not. Today, it seems that it's obviously doing much better. And I think you can say that about a lot of the Southeast Asia areas over the last 15 years, what's happened since the Asia crisis. I mean, David, we keep saying this, but you know it better than anyone as someone who travels there all the time. It just seems to me that the markets there are starting to mature. The rules are starting to mature on understanding the whole debt, on how debt works and how equity works. And the truth is, as people feel more comfortable, you're going to get more money into it. And I think it will be a lot of U.S. money.
Now, Mac, you've spent a lot of time in Mexico. We didn't really talk too much about it yet. Mexico's economy is booming. I think it's now the 11th or 12th largest in the world. But is it really safe for business people from the United States or elsewhere to go there, because you keep hearing about kidnappings and other drug-related problems? So do you feel safe when you go there, and how serious is the drug-related problem?
Well, I do feel safe, but I'm mindful that you need to use good judgment and take certain precautions. And there's just no question, David, that the challenge that President Peña Nieto has is for him and his team somehow to change the paradigm regarding the narco-trafficking with the huge sums of money and all of that, the influence it buys, and the related security issues. I mean, that's clearly an element that if it could be improved on with a more positive direction, constructive solutions like we saw in New York City and some other examples, Colombia certainly, where the security situation is improved, it will fuel the economic growth and the investment in Mexico even more. But despite that, you have a very developed and increasingly developed economy in Mexico. Banking system strong there, middle class is growing, housing is growing, financing is available, and now, frankly, with China's cost rising, you see a return to Mexico in terms of basic manufacturing, certainly in the automobile industry and others. The Union, I'm on the Union Pacific Board of Directors. You see a dramatic increase in shipments from rail there. Right. So I think the trend line is quite encouraging. The basic fundamentals are, in my judgment, in place, including a strong independent central bank, which has been in place for a number of years. But for Mexico to truly achieve its potential, they'll have to make progress on the security issue. It'll always be a negative factor otherwise.
Let me shift to a couple other parts of the world we haven't covered that are also emerging markets. Let's take the MENA region, Middle East, North Africa. The Arab Spring probably dissuaded a lot of people from wanting to invest in some of those areas. But do you think that the Arab Spring will have a lasting effect in keeping people from wanting to invest in those regions, or impairing economic growth in North Africa or in the Middle East? And do you have any views on what's likely to happen in those areas?
Well, I'm certainly not an expert there, but on the discussions that I've been privy to at least to listen to carefully, clearly it's a region of uncertainty, David, right now. It's a very, very uncertain, concerning landscape. But as Robert pointed out about Indonesia, I mean, risk and reward, there's a relationship there. So I think for those that feel that they can manage those risks, particularly in some of the basic infrastructure, the basic services, it's probably a good time to consider that, but clearly not without risk.
Can I jump in
Yes,
and
sure.
say that the BRICS themselves are investing in that region? That is to say, if you answer the question by look at what other major economies are doing, you see continued investment, careful, but nevertheless it hasn't been abandoned.
Now, I mean, I'll again take my privilege as the moderator to say something about that area, and maybe somebody whose last name is Rubenstein wouldn't be the best expert, but I'd say if you divide the Middle East, North Africa into 4 areas, the Northern Africa is more challenged now as a place to invest because of the events in Egypt and Tunisia and so forth. So you're not going to see a lot of capital go there right now, I believe. The Levant area probably won't see that much as well for a lot of political and geopolitical reasons. The Gulf Cooperation Council countries, they're probably not a great place in which to invest, though Saudi Arabia is increasingly inviting more Western investors in, but as a place to develop capital, and you see an enormous amount of capital leaving there. The wealth is still fairly significant there. But Turkey, the fourth area, is a place that I see a lot of capital from the West going in, and I do think that Turkey will continue to be a great place in which to invest. You'll see a lot more Western capital going into that. Let me go into another area we haven't talked about, Sub-Saharan Africa. So Sub-Saharan Africa, for those who may not follow it, it roughly has about 800 million people, 300 million in their definition of the middle class, about 54, 55 countries. 7 of the 10 fastest growing countries in the world since the beginning of this century are in Sub-Saharan Africa. There are some countries there that are extraordinarily wealthy in terms of oil revenues. Do any of you see that as an attractive place to invest, or any of you see this as a place that you would like to invest capital in, or to spend more time encouraging people to invest there? Robert?
I mean, that seems to me to be a real opportunity. The one thing I would say is kind of what you mentioned is the countries aren't really correlated. You broke up MENA into 4 quadrants. My guess is you would break up Sub-Saharan Africa into hundreds of quadrants. And I think that, as someone who's been in the markets, you really have to look at each investment almost in its own. You have to look at the political risk. You have to look at, I would say the different sectors and what sector is growing versus which sector has the wrong risk rewards. But I think that is an area that a lot of money is going into, from a human rights issue, from an infrastructure issue, and if you can get in on ground floor, it seems to me that as long as you're willing to give back to create, I think, a better environment, then you can also profit from it.
Yeah, it strikes me that Sub-Saharan Africa is almost unique in the sense that historically we talk about developed market capital going into emerging market capital, and now we're talking about emerging market capital coming into developed markets, like China coming in here. But here's a case where enormous amounts of emerging market capital is going into another emerging market. And as we all know, China and Middle East and other countries in emerging markets are investing enormously in Africa. So do you see this as a trend where more and more emerging markets are investing in emerging markets and bypassing the so-called developed markets? Julia?
Certainly in the case of Brazil. Brazil's investment in Southern Africa, Sub-Saharan Africa, pales by comparison to China still, but it is a growth market from the perspective of Brazil's giant multinationals. The largest infrastructure, energy firms are there. They're growing. They're exploring opportunities all over, and actually not just in Sub-Saharan Africa. In Angola, in the Lusophone countries, in Brazil's case, you see significant and growing not only investment in markets and investments in energy and infrastructure, but also a political side, which is reinforcing the economic side, where you see the diplomatic capacity building, nation building kind of efforts by the Brazilian government to backstop what its companies are doing.
Now, Robert or Mac, recently, a number of the BRIC countries and other emerging markets said we're going to have our own development bank. We don't need the World Bank so much. We got our own. The World Bank's controlled by developed markets, so we'll have our own BRIC development bank. Do you think that kind of trend where the emerging markets get together and do things that might not be coordinated with the developed markets is something we're going to see more of in the future? Either of you?
I mean, I'm not surprised by that because, for some reason, everyone has these taglines, the G7, which doesn't include some of the largest countries in the world. So now people say, well, they have their own G3. So I'm not surprised that these countries that kind of at times feel like the outsider looking in and may not be of equal shareholder value, feels like they have to go on their own and do their own things. It's no different than I think in this country. Laura and I have written about it. We need a national infrastructure bank in this country to help our infrastructure, where we are proud that we went from a D- to a D+ last week. So I think it goes in various areas. Sometimes you got to do it on your own.
Okay, Mac?
Well, David, you've skillfully moved us around the world in your moderating our panel, and I think you really have kind of identified, to me, a central core point that is so relevant to the Ex-Im Bank. We've already seen emerging markets and countries in the WTO negotiations, in the environmental discussions and accord, at the United Nations almost on a monthly basis, but that disparity or lack of consensus for a particular viewpoint or agreement to move forward. But I think fundamentally what it really suggests, the way you have talked about each of the regions, and you know them very well yourself, is the interconnectivity and the dependence of the world on each other's economy and stability. And we certainly see that in our country. Robert's noted about the investment coming into our country, not just from China, but we see it from Korea, Japan. There have been more jobs created south of the Mason-Dixon in the automobile business, over 1 million. Very good middle-class jobs that have been lost in the Midwest in the automobile business. Almost all of that has been driven, not exclusively, but largely, by firms outside the United States, including South Korea. So we're seeing a very changing landscape in the world. I would argue at the end of the day that while there will be disagreements, some tensions, certainly competition, at the end of the day, I see a much more likely convergence of interest with what we're talking about today.
Now, if all of you were told you had to put all of your money in one currency for the next 10 years, pick one currency, and I'll give you three. You can put it in the euro, the dollar, or the RMB, and you had to have all your money in that currency for the next 10 years. Which currency would you take?
You didn't include Bitcoin as one of them. I'm sitting here right next to the flag, and we're hosted by President Hochberg, so I'm going to say the dollar.
The dollar? Yeah. Because you think it will appreciate against those other currencies. Okay. Robert, you're a trader?
I would say the dollar.
All right. And another?
I would try to renegotiate your deal and try to have diversity of currency.
A basket of currencies, a very diplomatic answer. Okay. So if you had the opportunity to take whatever money you might want to deploy to invest in the emerging markets, and you could pick 2 emerging markets over the next 5 years to put your money in, which emerging markets would you invest in because you think the growth is so great, the opportunities are there, and the competition is not that's spectacular right now? Mac, where would you put your money?
I'd probably stay with those who brung us. I'd stay in China and Brazil.
China and Brazil.
Yeah, I would go into China, and I would probably go into Africa, something probably a little more risk reward.
Okay. Julia, I bet it would be Cuba.
Well,
what about the other?
I'm investing my intellectual capital
Latin
there.
American countries. What about the other Latin American? You haven't mentioned those.
I would say Peru.
Peru?
Colombia. Brazil still. Mexico. Chile.
Yeah. I thought you said 2.
Well, I walked through the open door.
She's talking about regions,
The privilege of the moderator is to exaggerate a bit for this purpose. But okay, so I can have 3 or 4. Okay. All right, so let me ask some questions from the audience. We have mics. So stand up, identify yourself if you're willing to do so. If not, just stand up and ask the question. And whoever gets the best question can be the moderator next year.
Yes. Good morning. David, you raised a question about if the title emerging markets is correct or something to that effect. We are Kitsalt Energy, a small company based in British Columbia, Vancouver, British Columbia. There, as we all know, they have discovered a lot of gas and developing for export. We regard that as an emerging market for export purposes, rather than the way this has been discussed here. And I was wondering what your comments were. And of course, one of the reasons that I'm here for this conference is because here is a golden opportunity for U.S. Ex-Im Bank to help us get some capital over there to help the market in British Columbia.
So your point is that the term emerging market is somewhat dated because if you discover something like new gas in a developed market like Canada, it shouldn't be treated as not an emerging market kind of opportunity. Is that your point? Because Canada is a developed market, so your view is that it should be treated different than a developed market?
Yes, I think so, yes.
Okay. All right. Well, I had never thought about it quite that way, but clearly, when you have discoveries like gas or other valuable kinds of exportable commodities in a country which is considered developed, yes, it probably needs some kind of special subsidies because it's not as easy to get it out of the country. And obviously, the exporting of gas from Canada is not a subject without controversy. But I guess my own view on the whole subject would be that the term invented in the early 80s, emerging markets, was a very useful term to kind of maybe give some confidence to some of these countries, and everybody wanted to be an emerging market. Its term is a little dated now because some countries have truly emerged. They're the biggest economies in the world, and some are still so-called frontier countries. So maybe somebody has a better phrasing, but I do think it's useful to note that this year, I think this is the first year, where if you take the purchase price parity dollar amount of GDP in effect in the emerging markets, it will actually surpass that of the so-called developed markets. So this transition, which is now going to go on for many, many years, of the developed markets having a lower GDP than the so-called emerging markets, will transform, I think, the investment world and the geopolitical world, because the wealth is obviously shifting from the developed markets to the emerging markets. But I don't have a better answer on your own question. Other questions?
Thank you for the very enlightening, terrific panel. I have a question on climate change. Yesterday, President Kim of the World Bank has announced that, at least as one of the pillars for the bank going forward, climate change is probably the major threat, or one of the major threats to development worldwide. It's both a challenge and an opportunity, so I'd be interested in your perspectives. Thank you.
Okay, who wants to tackle that easy issue?
Yeah, it's an easy issue, but it's a real issue, whether it's climate change or challenge of the environment, and how do you balance that with economic growth. Carlos Ghosn, whom, David, I think you've interviewed before, makes a point at last year's Detroit Automotive Show that essentially if you take the trend lines and see all of this middle-class growth that Fred and others have spoken about, and those aspirations, you basically need 2 planets to support that growth in terms of natural resources. We really need to kind of double the world we live in. Obviously, we can't do that. So that's one challenge on the resource side. On the other side, we certainly see it now in China, particularly with automobiles, where you see not just automobiles, but other power generation sources, of how do you sustain the tremendous demand and need for job growth, job creation, stability, social harmony, as the Chinese government refers to it sometimes, with environmental realities, including climate change. And no one has come up with a perfect recommendation or program here, and certainly no one has come up with a program that has been achieved any kind of consensus here in the United States, much less globally. But over a period of time, I think it's inevitable, and I think you'll see countries in these developed markets, China, India, and others, just absolutely having to come to grips with this very, very difficult problem. And we'll have to deal with it here in the United States. I don't have any silver bullet answers.
Julia?
The Obama administration's EPA in its first term created something that was at first limited to the United States and Brazil called the Joint Initiative on Urban Sustainability. And its purpose was to try to link capital to the new urban investments, especially around Rio and Brazil and the Games and the Cup coming up, that are environmentally sustainable. And there is now a sort of JUICE +1 or 201, but the idea that there are opportunities actually in investing in environmentally sustainable infrastructure is I think, something that is born directly out of your question about how to manage these two dynamics. And there are places, I know there's some linkages between Philadelphia and Rio de Janeiro, and capital being pulled in and moved into development projects in both cities like that. So sometimes it's not at a national scale, but more city-based, mega-city focused.
My own view on it is that it's unlikely there's going to be a global solution to climate change where everybody signs on to it. So my thinking is what's really going to happen is each of the major countries that are affected by, everybody's affected by climate change, but the major countries, the major GDP countries are going to on their own come up with their own solution, which they'll implement without any global solution because countries will see so much political benefit to the leaders of those countries by doing something. So even though it won't be a global solution, you will see China coming up with its solution and the United States with its and Western Europe with its. And probably 10 or 20 or 30 years from now, we'll begin to see a more common practice of all these countries. But it's going to take more than 5 or 6 or 7 years for this to actually happen, in my view. Time for maybe one more question. Yes.
One country that you didn't mention in the BRICS countries is India, and I'd love to hear the panel's view about opportunities and threats or problems in India and in South Asia generally.
Yeah, it was an intentional oversight, and I did think that we hadn't mentioned India. I'm glad that you raised the question. Comments on India? I'll give you mine after we hear yours.
I'll start it and then quickly pitch it back to you, David. I mean, India's obviously going to have 400 million people in the middle class, which is twice what the United States, or not twice, but larger than the United States population. So clearly, it's a major growing market. To state the obvious, very complicated to do business in. Makes investments very complicated in terms of the partnership structures and so forth, and the overall efficiency of an operation. I think there'll be certain areas in India, particularly technology, which we've already seen, and some of the other communications efforts there that will likely grow. But a pretty unique place to do business in, viewed very differently than China.
You know, I would just say I think one of the biggest growth engines into the U.S. will be Indian companies coming into the U.S. Yeah. We were with a client yesterday that's doing energy transmission, and they've relocated to Texas. I would say 95% of their employees are U.S. They're getting tax credits within Texas. Maybe 5% are Indian within the establishment. And I think we're going to see more and more of that. It started with the services, whether it's the Wipros or the Infosys is coming here. But I think now you're going to see technology, healthcare, a lot of different companies come into India this way.
And Dave, just a quick PS, the largest investment in my home state of Arkansas last year was an Indian company in manufacturing.
India, Julia? No. India, when the phrase BRICS was invented, it was thought that China and India might receive equal amount of attention from the West as a place to invest. As it turns out, China has received much more foreign direct investment than India has, in large part because the observation has been there that very few Western investors have invested in India and made investments successfully and taken money out. It's been a very difficult place to invest, in part because there's a lot of bureaucracy that makes it more difficult, in part because there are many wealthy Indian families who often see the best deals and they often take these opportunities. So the amount of money taken out of India as profits by Western investors has been relatively modest compared to China. I believe that will change because the Indian government recognizes that problem, but it's going to take more than a few years before India is as attractive a place to invest as China, in my view. So let me just conclude with, if I could, 2 questions. How many people, after hearing everything today, are more likely to invest in emerging markets if they had capital to invest than they were before they heard this panel? Anybody? Geez, how many people are less likely? How many people are depressed about the state of the emerging market world? Anybody? Okay, well, the emerging markets are getting a great deal of attention. I think they deserve a lot of attention, and I think the Export-Import Bank has done a great deal of help to American companies and enable them to export to the emerging markets, and I think that's been one of the engines driving some of the growth in emerging markets, but obviously the young populations and other factors have been involved. So I want to thank all of our panelists for a very interesting conversation. Thank you all for your attention.